Welcome to De-Risk. We're the podcast bringing you no-nonsense analysis of stocks. And today, we're doing a deep dive on semiconductor giant Broadcom, ticker AVGO. Our research pulled September 5th, 2025, pretty early, 6:37 a.m. Eastern Time. It really points to this incredible AI surge. So our mission, let's unpack that story for you.
Okay, but before we dive straight into Broadcom, let's maybe set the scene with the market today. It feels a bit, well, split, wouldn't you say?
Oh, absolutely. It's quite fascinating, actually.
How so?
Well, you look at the pre-market futures, and it's a real contrast. The tech-heavy NASDAQ, it's looking ready to sprint.
Okay.
But the broader S&P is, more like a light jog, and the Dow seems like it hit the snooze button.
Right. Still waking up.
Exactly. And this tech optimism is kind of running headfirst into this undercurrent of worry. We keep hearing recession warnings from major institutions. Plus, we've got the jobs data coming up later today, which always adds a bit of tension. So the mood feels cautiously optimistic, but maybe with a finger hovering over the panic button. Gotcha. Cautious, but ready to react. Okay, so while parts of the market are maybe hitting snooze, Broadcom's alarm, it seems, went off ages ago.
He definitely sounds like it.
They seem to be on their third cup of AI-powered coffee already. And given that cautious mood you described, their latest earnings report, well, it stands out even more. It felt like a real mic drop moment.
It absolutely was a mic drop. I mean, they didn't just beat expectations, they smashed them. 22% year-over-year revenue growth. Incredible.
Wow.
And then they follow that up with a really stellar guidance for the next quarter. And the driver. They specifically called out an acceleration in AI revenue.
Acceleration, that's the key word.
Exactly. So it makes you wonder, is this AI momentum really insulating them? Or is it, just a temporary split from the broader market jitters?
Well, that leads right into what I found really interesting. The headline act, you could say, the real showstopper in our research. This massive $10 billion order.
Yes, the big one.
For custom AI chips from a new cloud client. Huge news. And adding to that, CEO Hock Tan confirmed he's staying on board until at least 2030. That signals leadership stability right when they need it.
That's significant, yeah. Leadership continuity through a growth spurt like this is important.
But that $10 billion order, it's eye-popping for sure. But let's be real, how much of that good news is maybe already priced in, especially when you look at the valuation picture from our research?
That's the million-dollar question, isn't it? Or maybe the multi-billion-dollar question here. It's this classic tension.
Right.
You've got these undeniable growth factors, real tangible stuff.
Right.
But then our analysis suggests the company is, frankly, overvalued. Our fair value estimate based on free cash flow is closer to $209.
$209. Okay, that's quite a gap from where it's trading.
It is. And yet you look at Wall Street analysts, overwhelmingly bullish. I think it was 40 out of 43 with a buy or strong buy.
Almost unanimous.
Pretty much. So it's more than just growth versus value. It feels like the market is fundamentally re-rating companies that are, building the foundations for AI. Broadcom's valuation. Yeah, it's steep. But maybe investors see it as buying a piece of a whole new economic engine. Maybe the old metrics are just struggling to keep up.
It's like the market saying, catch up valuation models. So are investors listening to those valuation warnings, or are they just buying the AI hype? What's the sentiment telling us?
Well, our research points pretty clearly. They seem all in on the hype.
Okay.
If you look at the options market, for instance, it's decidedly bullish. The put-to-call ratio is sitting at 0.83. That means more bets on the price going up.
Fewer puts than calls.
Exactly. And short interest, it's incredibly low.
Yeah.
Just over 1% of the available shares are being shorted.
So almost no one is betting against them right now.
Very few are willing to take that risk, it seems. The market clearly thinks this growth story is real and has legs, and they're willing to pay a premium for it.
All right, so sentiment is sky high. Let's get technical. Forget the headlines for a second. What are the charts themselves saying? Under the hood, the price action.
The technicals are about as clear as they come, actually.
Good news, then.
Mostly, yes. You've got a clear uptrend, both long-term and short-term, just consistently making higher peaks and higher valleys. Textbook stuff.
Okay.
Volume indicators, they're flashing green too. You can see signs of accumulation, heavy volume supporting the recent price surges. Momentum looks strong, and it's building.
Any red flags at all?
There was one minor conflicting signal we noted, but honestly, it's pretty small compared to the overall positive picture. And volatility seems stable, consistent, controlled moves, which you'd like to see in an uptrend.
Okay, so fundamentals are booming, sentiments through the roof, technicals look strong. but we still have that valuation concern and the slightly shaky macro backdrop. How do we synthesize all this for you, our listener? What's the final call from our research?
Yeah, pulling it all together. Our verdict leans towards a bullish outlook.
Bullish, okay. Despite the valuation.
Despite the valuation, yes. Here's why. Those fundamental drivers, the huge earnings beat, the great guidance, that $10 billion AI deal, these are really powerful catalysts. They can almost create their own weather system. This feels like tangible acceleration, not just wishful thinking or hype.
Right, real orders, real growth.
Exactly. And when you add the overwhelmingly positive sentiment and that strong confirmed technical uptrend, well, that's a powerful tailwind.
So momentum trumps valuation for now?
It seems that way. Momentum is king in this situation. Look, the overvaluation is a valid point, a risk to keep in mind. But right now, the forces pushing the stock up seem stronger. In a market that's generally nervous, Broadcom looks like it's building its own little economy, one AI chip at a time. The price is steep, no doubt, but investors seem happy to pay for that ticket to the future.
And based on our research, are there specific levels you should be watching in the near term?
Yeah, for the next few sessions, keep an eye on $335 on the upside. If it can break through and hold that, it could be significant. On the downside, $306 looks like the first area of potential support, the initial line of defense.
$335 up, $306 down. Got it.
This whole situation really underscores how some companies aren't just riding the AI wave, they're actively shaping it, forcing us to rethink how we even value these businesses.
A fascinating case study indeed. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.